The inauguration of a president for a second term often brings a sense of stability to financial markets. Investors typically have a clearer picture of the administration's policies and priorities. This time, however, the situation is different. Donald Trump's second-term inauguration has been met with a mixture of anticipation and apprehension. The stock market, a barometer of investor confidence, has shown signs of both optimism and concern. While some sectors have rallied, others have lagged, reflecting the uncertainty that pervades the current economic landscape. Inflation, a persistent threat, continues to weigh on the minds of investors and policymakers alike. The coming months will be crucial in determining the direction of the market and the economy as a whole. Trump's policies, particularly those related to trade and taxation, will be closely scrutinized for their potential impact on corporate profits and economic growth. Inflation, the silent thief of purchasing power, has re-emerged as a major concern for investors. As the cost of goods and services rise, the value of a dollar erodes, making it more difficult for businesses to maintain profitability and for consumers to afford everyday necessities. The Dow Jones Industrial Average, a widely followed stock market index, has shown volatility in recent weeks as investors grapple with inflation fears. The index, which tracks 30 large publicly owned companies, is seen as a bellwether for the overall health of the stock market. Similarly, the S&P 500 and the NASDAQ Composite, two other major stock market indices, have also experienced periods of turbulence. The S&P 500, which tracks 500 large-cap U.S. companies, is considered a broader measure of the stock market's performance. The NASDAQ Composite, heavily weighted towards technology companies, is often seen as an indicator of investor sentiment towards growth and innovation. Investor sentiment, the overall mood of the market, can have a profound impact on stock prices. When investors are optimistic about the future, they are more likely to buy stocks, driving up prices. Conversely, when pessimism prevails, investors tend to sell, putting downward pressure on the market. Several factors can influence investor sentiment, including economic data, geopolitical events, and corporate earnings reports. In recent weeks, investor sentiment has become increasingly cautious as inflation concerns and rising interest rates have tempered expectations for economic growth. This shift in sentiment is reflected in the performance of various market indicators, such as the CBOE Volatility Index, often referred to as the Fear Index. The VIX measures the market's expectation of future volatility, with higher values indicating greater uncertainty and potential for large price swings. Section 4. Apple's struggles, downgrades, and forecast concerns. Apple, the world's most valuable company, has recently faced headwinds that have raised concerns among investors and analysts alike. The tech giant, known for its iconic iPhones, Macs, and other innovative products, has seen its stock price decline amid a broader market sell-off and company-specific challenges. Several analysts have downgraded Apple's stock, citing concerns about slowing iPhone sales, increased competition in the smartphone market, and the impact of a strong US dollar on the company's international earnings. Apple's own revenue forecast for the coming quarter fell short of analysts' expectations, further fueling concerns about the company's near-term prospects. While Apple remains a highly profitable company with a loyal customer base, its recent struggles highlight the challenges facing even the most successful businesses in an increasingly competitive and uncertain global economy. Section 5. Netflix earnings, a mixed bag for tech and streaming. Netflix, the streaming giant that revolutionized how we consume entertainment, has reported mixed earnings results, sending ripples through the tech sector and the broader market. While the company exceeded subscriber growth expectations, its revenue fell short of analysts' forecasts, raising questions about the sustainability of its business model. The streaming industry has become increasingly competitive in recent years, with new entrants like Disney+, HBO Max, and Peacock vying for a share of the growing market. This increased competition has put pressure on Netflix to continue investing heavily in content acquisition and production to attract and retain subscribers. Netflix's earnings report serves as a reminder of the challenges and opportunities facing the tech sector as a whole. While innovation and disruption remain key drivers of growth, companies must continue to adapt to evolving consumer preferences, technological advancements, and competitive pressures.